All right, let's get started. Okay, so let's answer these three fundamental questions. Okay, what is day trading? What is futures trading? And what are contracts? And how do I make money? Okay, so first off, what is day trading? Day trading is basically um, capitalizing on very small movements in the market. Okay, day trading is making money capitalizing on very small movements in the market. Okay, it's not like simple where you buy something and you wait and you hold it for years. It's not mutual funds where you buy it, the bank invests for you, and you hold it for like what, 30, 50 years. It's not like that. No. This, you're in the market, you're out. Okay, sometimes your trades last seconds, sometimes they last minutes, right? Most of the time they last 5 to 10 minutes, right? um, that's essentially what day trading is. Okay. Number two. Okay, number two. What is futures trading? Okay, what is futures trading? Basically, futures trading is like day trading. It's basically day trading. You're trading with leverage. Okay, you're trading. Just try not to get it confused. Futures, similar to stocks, similar to forex, just a different market, right? Just a different market. So you have your stock market, you have your forex market, you have your futures market, right? Three different markets, and you can trade with leverage in those three separate markets. Okay, essentially, they're essentially fundamentally the same when it comes to day trading. You're trading with leverage. Okay. For example, in forex, you're using lots. Okay, you're using lots. In stocks, you're using shares. But in futures, they call it a little different. They call it contracts. But you're still buying a piece of that whatever you're buying, and you're trying to trade it with leverage, if that makes sense. Okay. It's like buying a stock, but then in the stock market, you're buying shares. In forex, you're buying lots. Futures, you're buying contracts. So you're just buying an asset. You're just buying a piece of that asset, essentially. I hope that dumbs it down. There's so many information out there. Like, I don't want to cloud your guys' mind. I'm just trying to like make it concise and make it the easiest way to understand. Okay. So essentially, you're just buying a piece of this. For example, let's use Nasdaq futures. You're buying a piece of Nasdaq futures. We call it contracts. In stocks, they call it shares. In forex, they call it lots. But in futures, we call it contracts. And we're gonna use that to trade small movements in the market. Okay, small movements in the market, and we're gonna capitalize on small movements in the market. Okay. Next question. How do we capitalize on those small movements in those markets using futures contracts? Well, you have two types of contracts. You have mini contract and you have micro contract. The current chart that I'm on is on micro contract, MNQ. So this is a micro Nasdaq futures contract. There's also NQ, which is the Nasdaq mini contract. Okay, there's two types of contracts in futures. Okay, NQ is the mini contract with mini NQ contract is $20 per point. Okay, $20 per point. So if the market here, if the market goes, we're at 27,782. Okay, if the market goes down 5 points, that's nothing. Okay, if the market goes down 5 points, and if you put a sell position, okay, you basically win $100 from 5 points. That's it, $100 quick if you put a sell position. Okay. Um, if you put a buy position, obviously you're going to lose $100 because you're betting on the market to go up. If you put a buy position, you're betting the market to go up. Okay. If you put a sell position, you're betting the market to go down. Okay. And then another important thing to note, if you're new, if you don't know, if you're betting for the market to go up, that's called longing. You're bullish that the market is gonna go up, right? You have a bullish bias. You're gonna long. You're gonna go into a long position. If you're betting that the market is gonna go down, you're going bearish, okay? You're shorting the market because you think there's a bearish momentum and you think the market is gonna go bearish. It's gonna sell off. It's gonna go down. So long, if you think you want to bet that the market is gonna go up. Short, if you think that the market is gonna go down. Okay, this is the beauty in these markets, is because you can make money. It doesn't matter if the price goes up or down. You make money both ways. Okay, you make money both ways. All right. Anyways, back to the contracts. So we're in the mini contracts. But we talked about when the market goes down 5 points and you put a short position, right? You get $100 because one NQ contract is $20. Hope that makes sense. I hope that makes sense. And if the market goes up 5 points, since NQ mini contract is $20 per point, you get, and then you put a buy position, you're going long, you get $100. You win $100. Does that make sense? I hope that makes sense. It's the same thing with with micro contracts, which is MNQ, which is what I trade. But it's just 1/10 of everything, right? So instead of $20 per point for mini contracts, it's gonna be $2 per point. So if you're longing this, meaning you think that the market is gonna go up, you're betting the market's gonna go up, you're bullish, and you buy, and your target was 40 points. You buy and your target was 40 points, right? Then it's gonna be 2 times 40, and your target, your win is gonna be $80, right? Easy for one micro contract. Okay. Hope that makes sense. That's essentially how you make money in these markets, right? You buy, you sell, you make money both ways. We use strategies to predict where price is gonna go, right? That's how we win. Hope that clears it up. But if you have any questions, just shoot me a message, okay?